Hi folks, this is Sean Hyman from Chart of the Day, and I was just scanning through my charts. I had gone through the daily charts and was going through the 4-hour charts, and I saw a new theme that I believe may be emerging. And you can see this new theme just by drawing your trend lines, connecting your highs on your downtrends, connecting your lows on your uptrends. And this is the New Zealand dollar against the Japanese yen. And of course, we'd had our downtrend in force here and our uptrend in force here, and we have broken decisively with a large red candle down below this uptrend line. Wouldn't surprise me if it comes back up towards the uptrend line and then head downward. But why did I say it was a theme? Because I can pick up the same type of action on more than one chart involving one of the same pairs. And so here I am on the CAD yen chart, and let me have just a second to do this setup here. Okay, so here's our downtrend, and here's our uptrend, and our uptrend has been broken. Decisive red line coming down through here. This one has already pulled back up to the line and could tank further. So what is the theme? The theme is long yen versus the commodity currencies, mainly the Canadian dollar and the New Zealand dollar. I haven't seen this just yet on the Australian dollar, but sometimes when two of the three commodity currencies do that, it could mean that the third one is about to come. So I'm a little less resistant to short the Aussie many times, just because it is one of the only currencies in the only major currencies in the world right now that's hiking rates. It's been in rate hike mode and has had some improving fundamentals. And so, but New Zealand's been weak, Canadian dollar's been weak, particularly versus the yen, and it's shown up in breaking the recent uptrend lines. Now, I'm not saying this is a long-term trend. I'm saying this is a near to medium-term trend, because remember, we are on 4-hour charts. And so this is what will typically happen over the coming days, weeks, could be as much as a month, but we're talking near term here, 60 days or less, and with the main focal point being over days, weeks, and maybe 30 days when you see these breaks here. So I think it's a good thing for you to make a good practice of running through daily charts and drawing trend lines, and running through 4-hour or 1-hour charts and drawing trend lines. Make sure you look far enough back in time. That's the key to drawing trend lines. On a 4-hour chart, I'll use a 40-day look back period. On a 1-hour chart, I'll use at least a 30-day look back period. And on a daily chart, I'll look back at least a year. And because the thing is that people will get trend lines wrong if they don't look far enough back. And so that can be very detrimental to their trading. So you want to look back far enough to where you can see enough highs in a downtrend, enough lows in an uptrend, so that you've covered enough ground, you've covered enough enough points in common to where if that line is broken and it's closed beyond and retested, that you know that it's likely a trend change happening. And so that's one of the biggest things I would like to emphasize with looking for these trend changes, is one, just keep it simple, use your trend lines, and number two, always look back far enough in time. With the hourly chart, 30 days back at least, 4-hour chart, 40 days back at least, and on the daily chart, at least 1 year back in time. Hey, thanks so much for watching. Bye-bye.